Hello. In today's video, I'm going to update the technical outlook on bond markets, and this time, not only in the US but also in Europe and in particular Southern European countries. Then I'm going to show you a chart, a very interesting chart on US small caps, which are obviously breaking out, and on the other hand, gold, which is breaking down. First of all, a focus on the long-term outlook of US 10-year bond yields. So this is a very long-term chart. I already showed you numerous times. This is the chart of 10-year bond yields since the 1980s. So we can see right now that the long-term trend is changing. This week we saw a breakout above 3%. 3%, as you see, was a key technical resistance, and the fact is that US 10-year bond yields are now breaking above this level, confirming the possibility of a major trend change on US 10-year bond yields. This time, bears are also focusing in Europe, so they are coming back to Europe. And especially starting to sell pretty aggressively Italy. So as you can see, a significant trend change this week on Italian bond yields with what happened on the political side, with a break below a major downtrend line and possibly the start of a significant upside move, potentially back to last year high at 240%. If we switch to the spread between Spanish and German 10-year bond yields, this is the ratio. So what we can see here is a significant reversal of this ratio, showing that Spanish 10-year bond yields may be also starting a correction against Germany, with the spread possibly moving back to 0.90, even 1%. At least what we are seeing is that there is a significant trend reversal right now. Now if we could focus on US equities, we can see that the big picture of the S&P 500 remains pretty complex. Nevertheless, it is improving. We saw that in early May, the index managed to bounce off its 200-day moving average for the third time of the year. And at the end of last week, even broke above an important resistance at 2700. Which was the level to break to improve the short-term outlook. The next technical level at 2743 was hit at the start of the week, and the upside potential, if this rally continues, is around 2800. A very more bullish chart than the S&P 500. This is the S&P Small Cap 600 Index. So as you can see, a very strong momentum on US small caps, which are moving back to all-time highs and making a significant breakout right now. So this is a pretty strong chart, at least at the moment. Notice that the Russell 2000 is very similar in terms of technical outlook and also made a significant technical breakout. The last chart I wanted to show you is the one of gold. So gold made a significant breakdown this week below an important support zone, as you can see very clearly, which was located between the 200-day moving average at 1307 and 1300. So short-term breakdown on gold, and possibly an extension of the decline to the next support zone around 1270. Anyway, in the longer term, I don't feel very comfortable to place this breakdown, as we saw a false breakdown, similar false breakdown back in July of last year and also December. So I think this could happen again, kind of technical sell-off driven by the drop below important supports, later followed by V-shaped recovery and possibly a move back above 1300. But anyway, at the moment, it's too early to tell, and the short-term outlook is obviously deteriorating. If we put in parallel the euro-dollar, you probably saw this week that we continue to see weakness on the euro-dollar, which is also the reason why gold is breaking down, because of the correlation between dollar and gold. If we look at the 14-day RSI, euro-dollar is still oversold, and with the RSI starting to build a bullish divergence. And the next important support to monitor is 117. Quite significant level, which was almost reached over the last few days. Personally, I would favor a technical bounce from the support zone, which could match as well with a stabilization or a V-shaped recovery on gold. We'll see that in 1 or 2 weeks. Thank you.